Brent is at 72.27, and WTI has dropped below 70, down at 68.52. There seems to be a holding pattern here, thin volumes of trading, everybody waiting to see what OPEC will do. Today is the expected announcement of their decision. Of course, it was originally due on the December 1st. Now it's today. Let's kick off with Richard DeGoglia, CEO of Matrix Global Holdings, for the last time. Boo hoo hoo. Richard, you get to kick us off today. What do you think OPEC Plus needs to do to announce today to ensure a 70 plus handle on Brent in the first quarter?
Thanks, Sean. I appreciate it. I appreciate all the time you've given me to speak on this podcast. I don't think they need to do anything. I think that OPEC Plus it should be changing here. I think in the world of information, and I've talked about this for the last number of years, I think information technology has gone to a point where energy players understand supply demand in real time. And I think OPEC Plus, who's being told that their energy is not going to be needed in the next 10 years, or it's going to be less interested to people wanting to have hydrocarbons, they're going to start acting more like a super major or a VTOL or Mercuria. Why telegraph? Why not keep things out there so people are guessing? Because if you keep people guessing, the propensity of people to go short is going to be less. And so I think one of the things they've been able to do is to be able to maintain price stability by keeping production in line. I believe what they're going to try to do is outlast U.S. oil production rises. At the same time, kind of waiting for Chinese demand to lackluster demand maybe to kick back in again. But I think what OPEC is going to do is what they've been doing. And I've said this for a long time. I think they understand that they have the information at their fingertips. Vortexa gives them information for every cargo that moves. If I go back historically and we look at how OPEC has treated cheating has been treated by Saudi Arabia as something that they come down hard on, and they cause the price to come down forcefully because someone cheats. Well, you can't cheat anymore. You know where every cargo in the world is. You track it in real time. So Kuwait's not cheating. There is the propensity of other OPEC members to want to increase. But let's just do the simple calculation. At 29 million barrels at $71, you collect $2 billion a day. If I increase production by 1 million barrels or 1.5 million barrels, and I take the price down to $60 or $55, I collect $1.8 billion a day. It's a math problem. And I think it's a math problem that they have a calculator and they have figured out. So I think what OPEC will will continue to march along here, quietly give information. I would imagine they'll postpone, which I've been saying, they'll postpone these increases until we see either some greater sense of demand being higher, or we see an issue that comes about as a function of pushback from their members. But I think their members are okay. I think the way the ship is moving is fine with them for now.
Jay Maru, Head of Market Intelligence and Analytics for the Middle East and North Africa for Vortexa. Jay, your thoughts on the same thesis? Obviously, today is OPEC Day. What do you think this oil price has bedded in? Brent crude oil at 72.27. What do you think the market's expectation has bedded into that price for OPEC's decision today?
Thanks, Sean. Great as ever to be on Gulf Intelligence. I think the price today really reflects what so many people are saying now, and I think it's almost a given that these production cuts will roll over. There's really no signs of any real demand upswing. Yeah, like Richard said, we've seen the cargoes on the water. We see where they're going and what they're doing, and actually, for all the weakness that's been cited about the Chinese economy, we have seen in November a large uptick in Chinese crude imports, but that's really short-lived. And that's short-lived because China is buying cargoes at the moment, which is to fill up their SPR mandates for March. So there's about 60 million barrels a day they need to buy before the end of March. And we've seen that come into the market with more aggressive imports, but really the fundamental picture for China still remains the same. There are still longer term concerns over its economic performance. And then with that, really, if Chinese fundamental oil demand isn't strong, then really global oil demand is shaky as well. And so this price that we're seeing of $70 a barrel, it reflects the fact that we're not going to see any stellar figures for oil demand growth anytime soon. We haven't seen it throughout this whole year. And the adjustments made to forecast for next year as well by banks, by analysts, really reflect that picture is going to continue next year as well, in my opinion.
Narendra Taneja, India's leading energy expert. Narendra, your thoughts, how healthy is Asia? OPEC looking to Asia, of course, dominated by China in terms of the world's largest oil importer, being a critical pillar to the oil prices, the source of incremental demand growth. What's the outlook for Asia? How should OPEC look to Asian demand going into 2025?
Well, they should look at India. Because if you look at the demand is being driven by India. If you look at the data from November, the last month, if you look at growth in terms of demand for petrol, diesel, turbine fuel, LPG, I mean, on year-to-year basis, it has gone up, let's say, depending on the product, between 4 to 9%. 4 to 9, I repeat, on year-to-year basis. That's kind of tremendous and in a way phenomenal. But that shows clearly that as far as India is concerned, demand for petroleum products is only going to go one way, that is northward. And at the same time, when you look at the Asian landscape, I think in a couple of years you will have to forget China and focus on India as far as the demand, graph is concerned. And my own sense is looking at the kind of the way economy is doing in India. Just look at the population of cars. Every day. 13,000 new cars are being sold, 13,000, and all petrol and diesel, except for maybe 2% is like EVs. But and at the same, my own city where I live in New Delhi, 1,600 new cars are sold every day. 1,600, 1,600 petrol, diesel mostly, most of them. Now that's the kind of, and when you look at the projections, even by some very reliable sources, today we are consuming roughly 5.5 to 5.6 million barrels. But my own analysis is kind of, by 2030, which is like tomorrow, is going to go up to 7 million barrels. It's not only me, it's many others, and including BP Outlook. If you look at the latest report, it says the same and I go along with it. But my own analysis is definitely 7 million barrels. So we are moving in that direction. We are doing phenomenally well in terms of renewables. Target is 500 gigawatt. We are in the region of 200 gigawatt, but that's only supplementary. It doesn't mean that, is coming at the cost of demand for fossil fuels, not at all. So given that kind of scenario, I think when you talked about Asia, I think, of course, Middle East, the demand, we see some significant, numbers from there. But I think is India, which is now kind of is going to soon replace China as the biggest importer of crude oil. And now that India is also planning to set up more refineries and all that, want to hold on to that space, is kind of big exporter of petroleum products. I think then, which means the demand is only going to go up. So as far as Asian landscape is concerned, since you talked about Asia, I think forget China, focus on India.
That should be the T-shirt, the bumper sticker. That's what Richard will put on his Tesla as he drives around the sunny hills of Los Angeles. Looking out a little bit, and again, Richard, the outlook as OPEC sits down to think about the impact of Trump on demand and supply for the immediate future, obviously 2025. Your thoughts on that, what they should think about regarding that, and also maybe regarding the longer term. I mean, it seems to me that whatever your forecast, who's ever forecast, we've seen the IEA say peak oil demand is coming in the few years' time. OPEC has it out 2050. But wherever one puts their pin in the map for peak oil demand, how many extra years should we add to that now with Trump's return and support for fossil fuels?
A good question. I think you add a number of years, and I think I'm going to go back. I asked Narendra if I could make this comment. Narendra, a number of years ago, when we were on this podcast together, right at the Ukraine war, said India was talked about. Why are they not doing sanctions? And Narendra made a very good point. He goes, India is a country of 1 billion people, and the government and the country and the companies are going to do as much as they can to help those people individually in the country of India. And what's important about that is I think that's what we're starting to see now as far as other countries. The American people have spoken. They want to change in leadership. And with that leadership comes all kinds of things, right? One of the things, it means more hydrocarbons. It doesn't want a government to tell them what kind of car to buy and what kind of stove to use. And I think we're going to see in the United States a robust economy. I know you might have heard about this thing called Doge, which is going to be Elon Musk and Vivek Ramaswamy. They are going to shrink the size of the bureaucracy of the US government. Now, think about that, everybody. Think about if every country in the world globally shrunk the bureaucracy and let the government shrink and let those dollars work their way back into the private economy. Think what that would do for global growth. And I think that's what we're faced with. I think that we're looking at a situation where it's not just in the United States. It just happened in France today. It happened in Germany. It happened in Italy. It happened in Hungary. It happened in the Netherlands. It's happening in every country. And people are saying, I understand there's climate change. I understand these things are happening. But what they're saying is we want to make our own decision. And the only country that is seeing the massive growth in EVs is a totalitarian communist country. So I'm finding myself in a very interesting point here where I feel like what I've been saying is right. And I think what we're going to start to see is a change. And I think there will be an accommodation between Trump and the Middle East where it's not going to be so much oil. It's going to be natural gas. Natural gas is going to be the big play that the U.S. is going to come out with. And I think that's what's going to see a tremendous increase in natural gas exports. Where oil goes, I almost want to think that what Rhonda says is right. It's India demand that's going to be telling us where oil goes, not China demand. I don't think the Permian, one of the podcasters had a thing on U.S. Permian production. It really doesn't have much more to go. I think it's not going to be a big issue. I think it's going to be natural gas exports, and it's going to be the will of the people in these different democracies saying, I want to change what I choose to consume. And I believe that will be one of the biggest changes that we will see in oil and basically hydrocarbon demand itself.
Jay, just looking into the crystal ball that Vortexa has at its disposal every day in terms of the shipping flows and shipping rates and demand for tankers, etc. What do we see in there that gives us some sense of direction looking into the first quarter?
Honestly, we see a pretty bleak picture. So looking at what's happening with the utilization of VLCC, so the largest tanker carrier class, which is responsible for most of the crude cargoes that are carried around the world, we see the amount of utilization really at weak levels. Seasonally, we see rates for those tankers not very strong either. And shipping owners, charterers, they really have been looking towards OPEC to see, is there any glimmer of hope in terms of more supply coming on stream, which would help us with our earnings? But really that hasn't happened. And in some way, shipping can be a leading indicator of what's happening in the oil market. So really no real positive signs there. I just want to link back to what Richard said. At Vortexa, we were doing a little bit of scenario analysis, basically, with Trump coming in, especially on oil, what could be the potential ramifications. One thing that was touted was this potential 25% tariff on crude coming into the US from Mexico and from Canada. And I think it's very interesting hearing Richard's comments about this approach to kind of reduce bureaucracy when it comes to domestic activities, but this threat of tariffs and a more hostile approach to international trade. So it's a very different approach for domestic activity versus international trade. And really, when it comes to this, we really don't think these kind of headline grabbing tariffs will materialize. I think it's more of a negotiation tactic, or kind of poke the bear and see what happens next. But if anything like that was to happen, that would honestly be very detrimental to US Gulf Coast or US refiners generally. They need this heavy and medium sour crude going into their refineries rather than it being exported elsewhere to the likes of China. So actually, one way to see this is it's a bit weird, but if these kind of Trump tariffs were introduced on crude oil imports into the US, it could actually benefit China and other Asia countries more in a weird twist.
Well, Narendra, just bring you in on that. As you look at obviously the arrival of the new U.S. administration, its sort of announcements indicate the potential for tariffs and trade wars already brewing. Mexico, Canada, nobody seems to be off the list. Your thoughts on that as a global strategy? How could that impact India, the BRICS in general? Where do you see that dynamic going?
Well, honestly, I mean, of course, we were following very closely, all the new appointees and what they're going to do, and at the same time, how to deal with the Trump 2.0. But India is kind of experienced in dealing with Trump, and so we are not too worried about it. We know that he's transactional. We know he doesn't play chess like President Biden. He's kind of shoots straight and sits across the table and negotiates. So so we know how to negotiate with him. So India is not. I mean, our main exports are of course IT, software, and services. So on that we have already started preparing, and so we're not too worried about it. As far as if it has any negative kind of implications or repercussions for China, that works for us fine. You see, because in India our focus right now is on boosting manufacturing. And for that, we need more oil, we need more natural gas, and we need more energy. And I think President Trump, he understands it very well. And at the same time, if we go by experience of Trump 1.0, I mean, he was quite positive when it comes to India. As far as India is concerned, we're not with. Talking about the other BRICS countries, we have seen the report about some movement in terms of opening dialogue with Iran. We have seen some reports of majority of European leaders kind of, toning down on Ukraine and Russia. And at the same time, we have seen that, a kind of announcement he has made in terms of fossil fuels. So all that, if you put together in one basket, I mean, we find that for majority of BRICS countries is not a bad news. But at the same time, let's not forget one thing. The way we look at BRICS is very different from the way, for instance, Europeans or the Westerners look. BRICS is not some bloc or alliance. It's a movement. And where, for instance, the members of the BRICS, they work together where it works for them. But if, for instance, it does work for them, they go for their own way. For instance, there is very little common between India and China. But at the same time, India and China are important members, the core members of the BRICS, and also SCO. But we differ on many issues. We are a liberal democracy. We are more like a Western country than, so it works for us to very well to work with Western Europe and the United States. But at the same time, India is creating its own sphere, global sphere. We are not with this or that, whether it's Western or the Eastern or this block or that block. India is basically carving out its own space. And therefore, whether it's energy, whether it's oil, or it's renewable, or it's energy transition, you're going to see that India is going to follow what is the best for 1.4 billion people here, and at the same time for 3 billion energy poor across the global south. By the way, I have always used the 3 billion energy poor. And I recently heard the president of ExxonMobil, president upstream of ExxonMobil, actually saying that there are 4 billion people below energy poverty line. And he says that, and there probably in time to come, there are more people are going to be below energy poverty line. So we go along with that as well. That's 4 billion. So in such a scenario, BRICS has to work like what India has done. You go for protect your own interests in terms of energy security, energy transition, renewable and everything. And wherever, if you need to import from Russia, you need to import from whichever country. If economic works, go ahead and do it. We have done it. If we want other countries to do the same, there should be no energy apartheid. There should be no energy kind of weaponization. And I think energy has been heavily weaponized. It must be de-weaponized as soon as possible.
Let's go to the survey question, as mentioned earlier with Richard. Whatever peak oil demand date you subscribe to up to now, peak, some people like to use the word plateau. Peak has become the trendy word, but really it's kind of more of a plateau concept, that oil demand will plateau rather than peak and go down the other side. But nonetheless, whatever peak oil demand date you subscribe to up to now, what impact will the re-election of Trump have on delaying that date by close to 5 years, closer to 10 years, closer to even 20 years, or no impact? Obviously he has generally looks to have policies that turn away from the transition and turn back to the hydrocarbon economy. Does that translate to an extension of the use of oil? And so peak oil demand date will move out a number of years. That's the question. And your answer, closer to 5, 10, 20, no impact. Richard, looking at the sort of financial markets as we go into this period of fairly what is a softer oil price, and a lot of hard work, and even more hard work needs to be done by particularly OPEC Plus to keep that Brent floor at $70. Where does that leave the financial markets' appetite, do you think, going into 25 for investing, for including crude in their portfolios and so on? We've seen those waves move in and out of this market over the last 2 years.
I think it has to be profitable, right? I think that Guyana will be profitable, right? That's going to be an area. But I think when it comes to the Permian, we've seen the changing of hands. It's Chevron and Exxon and a couple of the big guys, and they're going to make decisions. And I've said this before, I believe they'll act more like OPEC. I think they're going to not put a lot of money into oil. They don't need to. I think everyone's kind of happy with this price. And so, the question becomes really on the OPEC side, is there going to be a push to increase OPEC production? And you can deal with that better than I. But I think that it's not really the oil side again. It's going to be the natural gas and petrochemical side. That is where the U.S. is going to have a tremendous advantage. And I think that what we're going to find is the industrialization of the United States. If we're able to get, and there's a very good podcast called All In. It's a very interesting podcast when you're not listening to the GI podcast. Listen to the All In podcast, everybody. It's brilliant, guys. And the question is, can the U.S. get back to 4% growth? Imagine if you take the U.S. government down by 50% and unlock the U.S. and its ability to grow. It would be tremendous. And that growth, I think, is going to come on the basis of petrochemicals and natural gas. So I think the oil side of it, I almost want to say it's an afterthought. Narendra made a very good point. I think India is the new China by far. It's a democracy. It's well run. It has issues. I imagine Narendra knows better than I, but I think it's going to be the engine of growth in the Far East. And I think the U.S. is going to be the engine of growth here. The odd man out is the EU. The EU is going through if the EU believes it's going to be able to compete in a world where the European Parliament is going to put on top of every country regulations that prevent it from growing in an industrial manner by not having cheap energy, it's going to be the odd man out. And I think the gain is going to come in for India in one side and for US on the other. So I believe that what we're going to see is not really an issue with oil investment. I think people have learned their lesson that you get burned too many times. The oil production's in the hands of the big guys now. It's going to be more the other parts of the hydrocarbon chain. I think they're going to see the tremendous growth going forward.
Jay, we have this sort of for much of this year, as we close out this year, we've had the direction of rates being a big factor in the outlook for the markets as a whole and for the commodity markets. Are rates the easing cycle? Is it still something that the oil markets, the energy markets are going to be impacted by? Is it still a big factor? Your thoughts as we go into the end of the year and the direction of travel for rates and its relevance for the markets?
Thanks, Sean. So there's a few things with shipping rates we need to consider. If we segregate it into the clean market and the dirty market, so basically clean products and crude. On crude, really, as we've heard throughout this podcast, there isn't, barring India, many real signs of growth and activity on oil, on crude oil. Doesn't look like OPEC is going to come back with significant extra supplies anytime soon. And on the demand side, outside of India, there isn't really anyone that's pulling in a lot more crude. from
But what
further
about the impact of the which has been there most of the year, the longer travel routes that tankers have had to take
So-
around Africa and so on, and putting an extra level of demand?
Exactly. So this is on the clean side. And this is going back to Richard's point, really, about Europe being the odd man out in this scenario, because Europe, with its reluctancy to take in its closest energy source, i.e. Russia, is taking now more diesel, more jet fuel from the Middle East and Asia. And because of what's happened with the Red Sea attacks, it's taking in these diesel and jet fuel cargoes along a much longer route. And so basically they're paying more for the fuel that they need more than anything else imported within the region. And that really isn't going to change anytime soon unless Europe takes a radical approach to how it's going to source its diesel and how it's going to source its jet fuel. Yes, Europe can take more diesel and jet fuel from the US, but even that's constrained. Really, the main source of export diesel and jet fuel cargoes comes from the Middle East and comes from Asia. And unless there's any magical change when it comes to the safety or the risk tolerance of Western operators in moving through the Suez Canal, then yeah, in Europe, diesel and jet fuel cargoes are going to take longer to get there. They're going to be more costly. And yeah, it really doesn't look so good for the European refining system either.
Narendra, just closing out with some of your thoughts on, I mean, one of the big factors that still seems to be moving this market, obviously the OPEC cuts continued in, if they extend them, obviously they are a foundational support to the market, but the sort of incremental price volatility is coming from geopolitics in recent times. And I wanted your thoughts on the latest developments vis-a-vis the Middle East conflicts, as well as the Ukraine conflict, and where do you see those going with the return of Trump, or does that make any difference? Your thoughts on the geopolitical fires that are burning in the world?
Well, 2 points here quickly.
Yep.
Number one is that in terms of prices, peak on oil, peak oil is nothing new. The first seminar on peak oil happened in 1911 in New York. That's
Right.
more than 100 years ago. So and this will continue. But my own sense is that OPEC may try. Of course, OPEC is a cartel, and it's their mandate to try to push the prices up. But I don't really see in the next 4 to 5 months at least, or maybe in 2025, I think prices are going to be in the region of $70 per barrel, 65, 72, 75. Average is going to be $70 per barrel in 2025, unless, of course, there is some dramatic geopolitical event. That's a different story. But coming to the Middle East and Ukraine, my own sense is that you probably are going to see some kind of stability in the Middle East. I mean, when I say stability, it's in the Middle East context, in the sense that we won't see too many fires here and there. And I think there would be some kind of progress, maybe not immediate results in terms of relations with Iran. We just saw reports that Saudi Arabia's Crown Prince MBS traveling to Dubai on a private visit. But when your Crown Prince of Saudi Arabia is never a private visit, there's something more than that. And similarly, we have seen, for instance, even before Trump moving into White House, some kind of breakthrough in terms of Israel and Hezbollah and so on and so forth. So I think things are already happening. Behind the scene, we see leaders are talking, track 2 is working, track 1.5 is working, it's already working. And the same, for instance, the other day, Chancellor of Germany took a phone call to President Putin, spoke for 2 hours. And I bet with you, they didn't discuss weather. So, and we have also seen, some change in terms of the way France is speaking now. Even the British Prime Minister, the last 24 hours, if you see his speech, he has toned down. The intelligence chief of Britain has toned down. So, which means things are already happening. My own sense is that President Trump would focus more on the United States by making sure or securing peace over Ukraine and also peace in the Middle East, and maybe even on Taiwan, because unless he can secure some kind of, tranquility in these geographies that I just mentioned, it would be difficult for him to achieve what he wants to achieve in terms of, the internal economic agenda, because America is such a big It's a huge economy. It's not possible. America is not Bhutan or Kenya that you focus only on your economy and you'll be do fine. No, he has to handle Middle East. He has to handle Ukraine. He has to handle Taiwan and some other parts of the world, including Africa. And he's going to do that. And if you look at the reports which are basically coming out, his team has already started focusing on all. So I'm positive. I think 2025 is going to be Trump's geopolitical year. We're going to see some good progress. I am not saying that there will be end of war here and there everywhere, no, but we will see some dramatic, geopolitical changes, positive changes, and I think it will have positive impact on the oil price in terms of the oil prices will actually start steadily going southward.
Steadily going southward. Well, Richard Rigoli will be very happy with that as he drives his 18-cylinder BMW.
Yes, exactly.
BMW 1200.
There's no Tesla. Yes.
And I'm not sure what Elon Musk has in mind for his Doge. I presume it'll be that whatever government employees remain, the 7 of them will all have Teslas. I would think that he's not going to be managing a policy that puts his business out of business. But what do we got here? Close to 10 years extension to oil with Mr. Trump, closer to 20. A bunch of more years with Trump at the wheel for hydrocarbon production. That's probably a good place to exit with you, Richard, and to thank you for your wonderful insights and contributions. Always appreciated. Always keeps one alert and the brain ticking over and needing to recalibrate one's thoughts. So I really appreciate that, and we'll certainly be in touch and see you all soon. For everybody, happy holidays and all the stuff that you might be doing at the end of any year, whatever is your gig, whether it be this or that, lights or not lights, end of year festivities, celebrations to everybody, and thank you. All the best. Bye-bye.
Thanks, Sean. Take care. Bye, guys.
Thank you. All the best.
Bye-bye.
Bye.